I think I'll go ahead and get started here. USDA has so many programs. Like I said, there's over like 140 different programs, that you could apply for and qualify for. So, a lot of this stuff, granted, you could get offline, but hopefully I'll just kind of condense it down to some of the main things that you can look for in terms of the programs that are out there for USDA. And they also even have a tool to help you look for resources that are available. If you go to newfarmers.usda.gov, there's this discovery tool you can click in, and you can put in things like, what are you farming? You could click the different things: fruits, vegetables, row crops, animal crops, put in there. And then also, what do you need? Do you want access to capital, land? Are you just getting started? Are you looking to protect the natural resources? Those kind of things. So you can click on those, and then it'll pull up some different programs that are available. So like here, it'd have credit access for historically underserved farmers and ranchers, beginning farmer and rancher loans. Remember, a beginning farmer rancher is someone that's been farming for 10 years or less. Microloans, we'll talk a little bit about those as well. But, so there are tools out there to try, USDA's put together to try to sort through all the many different offerings that are available. So just to go over a few things in terms of just terminology on what it is. What do we mean by a socially disadvantaged farmer? Okay. So it's defined by members that have been subject to racial, ethnic, or gender prejudice. And that consists of groups, American Indians, Native Americans, Alaska Natives, Asians, Blacks, or African Americans, Hispanics, and even women to a certain. So there are some women fall under most of these programs here. Not all, but in terms of the discrimination case that was with USDA, it's not just claims with regards to African Americans, Native Americans, and whatnot. Women as well are in a big part of that claim. And part of this this American Rescue Plan Act of 2021. You can see 39% of it, of the $10 billion, was applied to debt forgiveness for socially disadvantaged farmers. Basically about $4 billion there. So that's a large chunk here of what was put into the American Rescue Plan there. So it's probably not. I guess if you're not familiar with it, definitely it takes some time to dig into it and to see that in terms of whether you qualify for any there. But there are people that have qualified that didn't necessarily think they would qualify in terms of discrimination based in the past. Another thing I put up here is just this last year, we had IRA passed, the Inflation Reduction Act of 2022. There was basically $750 billion in the total package put in for like over the next, 10 years. It goes beyond up into, I think, 2035. So it goes out a ways, but about 40 billion was to agriculture. And over the next 4 years here, you can see 2023, there's only about 1 billion, but then it increases here quite a bit to where up to in 2026, we're basically, over 9 times more than we are here in 2023. The other thing to note is that this blue area here, the second bar up, is by far the largest area there. And that falls into the Environmental Quality Incentives Program, which is run through the NRCS program. And we'll look at some different things, but everything from high tunnels can be cost shared in there. There's, you know, in terms of livestock, developing waters, all those things fall under EQIP here. And some of these programs have a minimum amount that they're looking for in terms of beginning farmers as well. There's also a pretty good chunk here with regards to conservation stewardship program and the regional conservation partnership program. So conservation is also a big part of IRA, what's going for agriculture here. So the EQIP program here typically covers installation here, fees, and the conservation stewardship program has to do with kind of more ongoing maintenance. So it's like if you can get cost share even like on a sprinkler system, you know, if you have irrigation put in on the sprinkler system, and the EQIP will pay for that, but the conservation stewardship program could also provide funds for up to 5 years in terms of providing the operation of the sprinkler, if that required, you know, typically in terms of electricity, like with the center pivot or something like that. But, you know, drip irrigation is something as well that could be qualified for that in there. Normally for most EQIP programs, there's a 75% cost share. So it's like you have to kind of come up with the money first, but they will provide up to 75% of that cost. So that makes it quite attractive to do a conservation program if you can get, you know, 75% of it paid for. But if you're a beginning farmer, socially disadvantaged, you could be eligible for up to a 90% cost share. So you'd only have to come up, you know, if it was a $10,000 project, you just have to come up with $1,000, but you do have to come up with the money up front first to get it financed, and then it's like a reimbursement kind of program. And typically there hasn't always been enough money to go around for everybody in terms of all the projects, but given that we're looking at an environment here where we, it's not going back, is it? Oh, sorry. Okay. Yeah, so when we have this additional funding coming here in the next few years, especially starting 2024, 25, and 26, these 2 years here, I think there's going to be a lot more ability to fund all the EQIP projects that get submitted. So that's something to really keep in mind there. And also keep in mind that there's special funding pools, you know, for the socially disadvantaged and beginning farmers that can apply for those programs there. You have to have at least, you know, 5% of them, which isn't very much, but I guess things that you can fund. This is an example of a high tunnel. This is the best one I think I've ever seen out there. And he received EQIP funding for this on a cost share. One of the things I like about this high tunnel is that high tunnels are a lot of work if they're not automated, because what happens, they either get too hot really quick, right? So this here has a motor here on it for the sides to come up. It also has vents here on the end. So I've been in it before, and these sides will just automatically come up. And then after it cools off, then they'll go down just after a few minutes, because it is just really difficult to regulate the temperature when you don't have, you know, a lot of, it's not like a greenhouse where you have heating and cooling, you know, to keep that temperature there. But it's great in terms of being efficient, in terms of just utilizing the heat that's generated from the sun, as well as being able to, he's got a double wall here as well. So there's air insulation up there. So he actually had, this is down in Gilbert, but it's not Agritopia, but it's close to that area there on Steadfast Farms. But he was basically one of the few people that had tomatoes. That was, I guess it was 2 years ago. in the spring because we had there was a late frost that hit down there. Well, he had tomatoes in here and was doing quite well in terms of his market with the tomatoes because everybody else is pretty much frozen out. But the amount that you can grow in a high tunnel is pretty amazing. I mean, we're not talking about acres here. We're start talking about volume and sales. And on this farm here, he takes a lot of these starts out and puts them out in the field as well. But he also grows things in there directly as well. But this is pretty key to his operation. And he only has like an acre that he's farming in there, but yet he has over $300,000 in sales because he's growing 7 crops on some of the same beds there. And he's marketing directly to the consumers that are right there. It's basically built into the subdivision. So that's something to keep in mind is funding available on the cost share. It's basically like getting a grant in the sense you get, if you can get 90% of it back, you don't have to pay that back. So that's a really good deal for everybody to think about. I mean, it's not like a loan, but there is a risk in the sense that you may not get everything cost reimbursed that you expected, but hopefully with more funds available, as long as you meet the minimum requirements, you'll be able to get your cost share on that. So can we go to the next one? I guess. Okay, so with another way you can get grants without having to have a loan, because a lot of people are interested in, well, I don't want a loan. I want to see if I can get grants. But grants are actually pretty hard to come by in terms of to buy infrastructure. Like the EQIP program is probably the main one that I know of where you can do for like certain things, high tunnel. You can't use EQIP to build an office or anything like that, but value-added producer grants can be used to bring in some working capital that can go for facilities, even like, even meat packing plants have fallen under this small scale. But the planning grant is key leading into something that would be bigger that would follow through for a working capital grant. As an independent producer, you can apply for that. Cooperatives tend to be a little more successful, or even just a producer group. But tribes have been successful in getting value-added producer grants, but a lot of co-ops in particular have been successful in getting grants, and a lot of these have been related to livestock markets, small scale, as well as beef markets. Apply in there. I had an individual that was interested in beef jerky processing. His plan, what he was using it already was he was using the Wagyu beef for make his jerky, and he was marketing to craft breweries along the Rocky Mountain front. And it is pretty interesting process and everything going through, but he found that it was a little bit more difficult getting the funds than he thought it was going to be as well too for that. But so there's a lot of things to do. Just keep in mind that application period is typically here in the spring here. Like last year, this spring was in May, so that was kind of when those go up. But you can go to this website here, and that'll allow you to pull up where you could go for value-added producer grant, but there's no real special treatment here for beginning farmers or beginning ranchers. Just to give a little bit of an idea in terms of projects that have also been funded by rural development. Rural development is also part of USDA, and give you a feel for some of the projects that have been funded. They've basically been like 40 billion here was, or 40 million, I mean, here was funded here in 2021. If we look at Navajo County here, we can see that 7 million here for the Navajo Tribal Utility Authority was pretty much the largest component. So 7 million out of 40 million is still a pretty good chunk. I mean, that's about what, like 18% or something like that, close to that. And then, you know, in terms of the 15 counties, it's a much lower percentage there. So the Navajo Tribal Authority here was able to get quite a bit with related to water and waste water development there. The Econ chapter had some as well, but you can see, like in Yavapai County, there's a lot of other smaller entities that have been able to get rural development projects related to various different things. Typically, though, water and waste disposal are key among a lot of those, rural energy as well. Those are kind of things, and things that USDA also puts out there. Another thing that's getting to be bigger and bigger here in terms of Arizona as well is crop insurance. And when we think of crop insurance, you may not think of the insurance for rainfall and livestock, but that there's been tremendous growth in terms of the amount of payments that are coming back to the state, and it's been tied to crop insurance subsidies. I guess one thing to keep in mind, there are things for beginning farmers. There's reduced payments there. Beginning farmers are exempt from the administrative fee, and there's an additional 10% premium subsidy as well for beginning farmers. There's other things that you can do in terms of you don't have to have as long a yield history established. You can substitute from these transitionary yields, some of the county yields. You need just 3 years of records instead of 5 if you wanted to apply for what they call whole farm revenue protection and micro farm. That's based off of your Schedule F in terms of what your revenues are, and you can insure on that.
Yes, you have to register the farm to be able to get the benefit from beginning farmer.
Okay, so the question is, do you have to register your farm to get the benefit for the beginning farmer? Yeah, typically you pretty much always have to have a farm service number, FSA number, to be kind of like as a base for almost any program. And with yeah, like the crop insurance here, it may be possible to get a policy without an FSA number, but probably not. I think it's required on that one part of the form there.
If you just do like a market garden or something like that, like you need a high tunnel, for example.
Yeah, so if you want to apply for a high tunnel, yeah, what you want to do is keep your records, especially of what you're selling anything to the farmer's market, and kind of use that at least to, I mean, it doesn't take a lot to get a farm number. They just want to, you know, actually, what's the definition of a farmer by USDA? How much do you have to have in sales? How much is it? It's just $1,000, okay? So it's not a real high bar. It's been $1,000 for ever since, I think, like 64 or something like that. So, and you know, $1,000 in 64 was a lot more than $1,000 today, right? So, you know, I mean, they haven't raised that or anything, but yeah. So, farm service agency can get you a farm number pretty quick. And
just in addition, Angel is asking, when it comes to tribal land, is there anything that is needed specifically for these processes?
Okay, so in terms of tribal land, is there anything specific? Yeah, tribal land can get kind of sticky in terms of who actually has like the right to graze. I know like the Navajo Nation actually has all the policies on the pasture rangeland forage rainfall index, you know, most of the grazing land in the state. And, you know, that's basically kind of a whole political decision, I guess, too, in the sense that there are some areas, as I understand, on the Eastern Navajo Nation that have their fences defined within their area so that they're able to apply on that. But right now, the Navajo Nation in general is collecting that revenue. And then the subsidies that are associated with those policies on the rainfall index. And then the idea is that individual ranchers would then apply for projects to improve the rangeland, water development projects about and around. A lot of that hasn't happened though yet, according to a lot of the ranchers that I talked with. But yeah, I guess they're going to want to see like lease records, in particular if you're like on lease land, to establish, especially for a loan or anything, and even with a FSA number probably as well. I guess if we had FSA here, they could speak to that as well. Or can we, yeah, okay. The other thing that makes it a little bit different here for just on the crop insurance is if they consider it have to be less than 5 years instead of the 10 years. So that's just something to keep in mind. But all these programs typically require a fair bit of records to keep track of. And next time we'll try to provide you some tools there to hopefully make it a little easier to qualify. Farm Service Agency, they're typically the loan operative of USDA. They implement a lot of other programs as well, but they're the agency that works for lending with beginning farmers. And beginning farmers are often referred to as the lender of first opportunity rather than last resort. But there is a certain element in the sense that they don't want to compete with the private loan industry. So they're looking to make loans to people that can't get loans at a commercial bank. Sometimes they'll ask you to go to the bank and get turned down. I know one guy, he said, okay, I'll go to the bank. So he went to the Bank of America, I think, and then they said, oh yeah, well, we want to take you on. But the problem was his rate they offered him was like 7%, and US FSA would have been 3%, so that was but they are viewed as being the lender of first opportunities. So they make loans for direct operating, farm ownership loans, as well as guaranteed loans that a bank, a commercial bank, will stand behind. So this is the rates that are right now just posted here, last posted here for October 1. So operating direct at 3.875, farm ownership direct 4.125, the microloan, I'll talk a little bit about this, 3.825. So, and there's emergency loans here. This farm ownership down payment, 1.5%. That hasn't really changed any over time because that's just based on the down payment. But these other, other than these two, these others all pretty much move up and down every month based on the market rates. So if we were to go back 6 months ago, this rate here, I think for farm operating direct loan was like 2.875, something, so rates have gone up, as we know, as we saw what mortgage rates for 30-year hit 7%, right? For a lot of people just the other day. So that's there. I put this slide in here to just show that for 2023 here, these are programs that are targeting socially disadvantaged women and beginning farmers. And note that out of there's like unallocated of like $6 billion. They have funds available. It's like 6.8 billion here total. And there's only been 107 million utilized so far. So you can see across the US, there's a lot of funds that are available on everything for direct farm ownership loans. But there's also things related to Indian land acquisition, Indian fractionated land that, nothing has been used of several million of dollars that have been allocated. So I guess this is just to encourage you that there's a lot of funds available out there if you can go ahead and meet some of the qualifying applications for them. Targeted, the socially disadvantaged, and with these direct operating loans, direct farm ownership loans, beginning farmers are a large part of the target audience. FSA personnel, Farm Service Agency for Navajo County is based, primarily out of Holbrook is the center there. For like all the loans, Harriet is the farm loan manager. I mean, she would probably come out and talk to us as well on some of this if you wanted. There's a fair bit of resources online. There's a couple like 80-page publications here to help you through the different things that on the farm service loan guides here. That's something you can look for. Again, this is just kind of goes through the different loans, things down here for beginning farmers and ranchers, even Native American tribal loans, all these. Just to look a little bit at the down payment program. It can be a 20-year loan. On the down payment is 1.5%. There's some things though that the maximum loan amount can exceed like 45% of the purchase price. So that makes this thing a little bit more difficult to implement because of the larger down payment that typically has to come from a commercial bank. And that commercial bank, sometimes FSA will provide a guarantee on that amount of 95%. But I guess I just throw this in there because everybody looks at that 1.5%, it's the lowest rate, right? But there's a lot of other things that have to be met to meet that, to have everything happen. And it wouldn't be the full amount of like a farm that you'd be buying. But it's still something that, that 1.5% is something to look at for, even if it's 45% of the farm there. The other one there is there's this program out there for land contract guarantees. The idea is to connect the rancher or the farmer that's been there for a long time. He's 70 years old or 80 years old or whatever, and he wants to have somebody else to come in and take the farm over, and he wants to make a loan to that. Well, the idea is it gives them the opportunity to get up to like a 7.125% rate of return right now. But the seller can request anything of these two things in regards to up to 3 annual payments, or he could get up to 90% of the outstanding principal balance on the contract. So this is a program, I just threw this in here basically because there is a program thinking about the landowner maybe wants to retire. This is a vehicle for him to try to connect with the beginning farmer to maybe get him a fairly good interest rate on carrying his farm, but at the same time, providing a lower kind of rate for the beginning farmer to get in on things. The operating loans, could be used for all the things with living expenses, fuel, fertilizer. There's a direct loan amount up to $300,000. We'll talk about the microloan. That's up to $50,000, and that has reduced paperwork. That's typically what most people in this kind of audience are interested in getting started. But there are larger amounts that are out there that USDA does for fairly competitive rates, the 3.875%. The ownership loan's a little bit higher, but look at this. Terms for up to 40 years here and 4.125%, So
A clarifying question. I was understanding the land contract was for family relatives. I'm not sure what that's relating to or what part of
the land contract, the question is whether the land contract is for family relatives. No, it doesn't have to be relatives. It could be relatives, but it could be just someone you know that's probably connected. The idea is to connect existing landowners that want to retire with kind of beginning farmers as a vehicle, I guess. So microloans, I'll talk about this here a little bit. The idea is there's less paperwork and forms to complete. And even though there's less, there's still a lot, according to what some people would think of. And it's not like everybody just goes in and comes away with money as well. This is an example of somebody in Central Arizona, Kelvin Johnson. He's a veteran. He was able to, he operates Grande Gardens Produce. He was able to get a microloan. I guess some of the things that are needed here, for operating microloan, which is up to 50,000, you need some farm experience. Appropriate small business experience can be applied as well. And they're going to want you to work with a mentor during the first production cycle for like an operating microloan. With the farm ownership microloan, you need at least 3 years of farm experience out of the last 10. And there are some things that can be substituted. And this is where this course could come in related in terms of 16 hours of ag-related courses in a course there. Military leadership management experience could substitute in. If you had a youth loan successfully repaid as well, that can feed back in as well. So those are things that are all put together for the microloan. Just some tips, I guess, the FSA typically goes over, and a lot of them will tell you is, always think about your water in terms of, if you're going in for a loan, they want to make sure there's going to be enough water on the property to be able to produce, and not that won't be a limiting factor as to why you can't make your loan payment. They won't finance things that are, I guess you might call exotics or not related to food, like race horses, but they will finance ag production and produce with an established market, even if that's a farmer's market. So that's one thing to keep in mind. This is just a checklist that they have on the microloan. You can see there's a lot of different things here, even though it's reduced. There's a lot of things forms that you have to be filled out, and we can go through that next time if you want. Additional info, they'll probably ask for the last 3 years of your tax returns and whether you filed the Schedule F or not. But you probably want to, if you're growing anything, you want to probably file a Schedule F because there's a lot of tax advantages to doing that in terms of writing off your production expenses. You may not, if you're collecting any revenues at all, probably deduct most of those. Copies of leases and contracts, and they'll also want like a mentoring agreement if you're going for a microloan for the first time and a mentor is with there. So just keep that in mind. So just kind of wrap up here, close things out. The FSA is a good place to go in terms of your first opportunity, because if you go to a commercial bank with very little experience and you're small, what are the odds they're going to take you? I mean, it's pretty low, So this is a place to really get started here. There are many forms and items to fill out there, but I guess you just have to think about, that's what you might have to do to actually get started farming, So, instead of having your life to where you think it's all at peace and everything, you may go to where, oh man, I've totally made things much for the worse dealing with all of the government forms and everything. But I guess, they have rules and they're going to follow them through. So just realize that there are a lot of things available for beginning farmers less than that 10 years. And the EQIP, the program with the high tunnels is a very good fit for a lot of people starting out here. I mean, especially in like this climate here, you can grow a lot of things even in the winter if you have the right high tunnel. Get that early start and late fall as well. You know, it's amazing how many things you can grow in there. And what's also interesting is just how we've had some trials in terms of things being outside versus inside. And the high tunnel just protects from the wind so much, I think. And also, I mean, the whole warmth is big as well, but just being protected from some of the elements of the weather, even when we had those hobos tracking the temperature, you know, inside and outside, and even putting covers inside the tunnel on some of them in some colder areas. It was just amazing how well the plants would do under there when they had just that little bit more of protection when it really came down and frosted. So I guess with that, I'll just close out there and go to our next presentation, I guess.
So can I just add a couple comments about
Sure.
that? So I did, and I'm sure they're not gonna be able to hear me on the thing, but so as my farm, I did try to go through the FSA program. And so just a couple take homes. I chose not to go forward with it at the time because some of the information they were asking, I wasn't quite ready to provide yet. But you do need a solid business plan. They will send you back for not having a solid business plan. 3 years of documented income, and it is through taxes. Like I think it's like the IRS Form F for farm. I'm not 100% sure, but check with your tax advisor.
Yeah, it's a Schedule F form is what they're looking for. Yeah.
So get that one. They you do need to talk to them in person. But the biggest thing when I talk to the loan processor is your business plan has to reflect exactly what you are and you want to do. And then you have to manage your expectations during the appraisal process if you're trying to buy land. Because the appraiser that comes out there that's appraising the land, they're looking from an agriculture perspective, not from buying a home. So they're looking how you're going to get water. They're looking at what the soil is like. They're looking at if you did your homework as far as what you can grow, and what your infrastructure is going to be in the future. So that's what they're looking at when they're appraising it. It's not like you're going to buy a house. So a lot of the feedback that I got, because I wanted to buy this amazing old farm down on Hay Hollow, and its infrastructure was completely destroyed. And they were like, we cannot give you enough money to fix it when it was appraised. So you have to understand when you go into the office, they're looking at it from a specific point. And they're looking at it from business. It's not personal, it's business only. So they will send you back, you will get more paperwork. They want to see this. They basically want to see every single thing about your business that's going to show them that you have the maturity and the ability to succeed since they're doing it. Do they require collateral when you? It depends on the loan and what you're doing and who you're working with. I've never been asked. So collateral is a funny word for them. They want to know what other assets you have. So they want to know what they can take if you don't pay. Yeah. But they're not calling it collateral.
But like the crop, like that would be like your collateral, or your animals could be like collateral as well. Well, probably not, but yeah.
It is hard.
But if you're getting the land. If you're getting a loan for the land, though, then the land is collateral. Yeah, that's the collateral. Yeah.
So you have to read every little finite thing when you go in there, and it is a lot of paperwork. It's very time consuming, but the people that use it and do it are very successful in being able to find this particular funding source. You know, it's not as intense. It's almost as intensive as getting a grant, but you're looking at 1 to 3% interest. You know, and just the other thing to throw out there is when you put in for these loans, the payment starts. So you have to have a product. You might have a grace period. So if you put in for a loan, who's working with a producer, he was putting in for these loans, but he doesn't have a product until maybe 2 years out because he was doing a lot of value added products. So FSA says I want it in a year for this land and everything else. They weren't willing to negotiate based on the fact that it was certain ways out for its value-added product and not the main product. So it got really sketchy. So when you go there, it's an amazing program. Highly recommend it, but go with an open mind, understanding that like it's going to be a lot of work to get through the paperwork process. Yeah,
and it's not going to be as fun as growing things. Yeah, so for most people in this room, yeah, so you have to keep that in mind. Yeah, it's almost like building a house. Yeah, you might have to spend almost as much to get your permits and everything as you do building your house. Yeah, yeah. Okay. Any other questions from? Thanks, Anita. Yeah. I mean, that's why we have this kind of this networking too, because if somebody's done one before, that's a good resource for you to follow up on. I know even like in Central Arizona, some of the individuals that were able to get a microloan fairly quickly is like, well, follow what they did, and a lot of their things. So simple is always good, I guess, but not everything is simple in terms of